everyone. We have a short week, 3 days if you listen to Blake's week ahead video. Can everyone hear me? Give me a Y if you can. My headset sounds strange.
I can hear you, Coach. Good morning.
Good morning, Stel. Thank you, buddy. So Mike Pence, as Blake was talking about last night, had some harsh words, some kind of bellicose exchanges between G and Pence, and Blake said the Aussie would come in lower today. Don't be surprised if they gobble up the break because of how well Aussie has been acting the last several weeks in the face of a trade war. So this could be just an ABC, and then we go. So I'm going with what happened last week was significant in the market. And on a shortened holiday week, the way I'm going to use it is to build some short positions in the dollar, thinking that what happened in the dollar is just the beginning of something and not just another false start, as we've had on the weeklies a few times. We had it here. We had it here. This was a fake out weak candle, then blew to new highs. I tried it a few times here, so I know it was grinding, but I think last week's action's significant. And now I could see the possibility that we get a real nice correction all the way from down here to down here. I don't think this is the end and the final high in the dollar, but I'll be interested to see the DSI and what some people are looking at in the COT, because I think there's potential to take it all the way down underneath 94, maybe even 93-ish in there in the weeks ahead. So on a week like this, if there's aberrational kind of trades, like they take the euro back down to, some fib retracement zone, 1350 to 20, I'd look to get long euro. Same thing applies in yen. And I know I was short the yen a week early, shorting at 1320, had to sit, sold some more higher, but had to sit through that rally to 1420. And to me, this looks like a significant break too. The only thing that would change the picture if yields really went up sharply, and they've come down, and U.S. dollar yen's come down. So I think 110 is very probable, and I'm hearing lower targets from some of my intelligence gathering, some as low as 107-ish down here. So if this week they try and buy this pair, and it looks like they're trying to hold it here at support, areas, zones that look interesting to me are 1310, 1320. That's where I did it before, and it started going back up. So that's how I would treat the yen. And if that's the case, that we're just going to have a failing rally in the end, looking to buy breaks and metals, thinking that last week was important. I'm not saying we can't get gold to trade maybe back down to 1212, 1210 to me. That would be a buying opportunity. I think we are going to take out this 1240 level. You need it to happen to prove it. It's more like this 1240, 37 level. So let's see where this line comes in nowadays. There's your daily 200 moving average, 1263. And why can't we have equality? This was ABC for 85 bucks. 85 bucks from 1196 takes you up to 1280, which was a prior breakdown. So I'm a ForexAnalytix ETF specialist. Do everything at your own peril. But if that's going to happen, you may want to consider this ETF moves pretty good when gold moves. So even though the dollar made new highs, I will say bullion's acting better than the shares, but maybe we get a short squeeze, maybe buy a pullback here, wrong under this low, looking for 20. So, that could be 60% on your money. I also remember gold seasonally. Important tops are put in February. There's the traditional thing called a February break that happens in the commodity complex. So, it's very possible that, this crude recovery and gold recovery and dollar sell-off lasts into next year. Okay, so, that gives it plenty of time to, squeeze people in the opposite direction. And just one last point I want to make, I don't really know what to do with the S&Ps, where they're at. But one thing I will say is that if the forecast is right about a weaker dollar, it's certainly hard for me to want to short the market if the dollar is going to weaken. So maybe we strengthen for a few days. Who knows what's going to happen? But, I think it's going to be more bullish once the dollar bottoms. Maybe it's at 93.5 level, 93, and then begins its march towards par. So, this could be a reprieve for equities, dollar weakness, because it'll nominally help a lot of the complaints. It's been currency translation from multinationals. So hard for me to get too bearish on stocks while the dollar is going down. If you want a great example, go back to the beginning of the recovery after the Great Recession. And at that time, the dollar fell about 30%, and the market rallied 30%. So you basically had nominal gains based on dollar weakness. So that's where I learned to be cautious about being bearish equities when the dollar is weak. You would think rationally that a weak dollar wouldn't be good for stocks because it says something about the economy, and these corporations are in the U.S. economy. So that's my view, using this week any aberrational moves to position against what happened last week, and not expecting, anything huge to happen as far as it being a trade, but beginning to build a position if offered. We have a nice guest today. Ellen Posner is going to be with us at Sea Lion LLC. So we'll find out a little bit about Alan at the top of the hour. I know a lot about my team. Okay. You know my expression. Don't just count your pips, count your blessings. While being part of this team, I count as one. So there's a blessing. 1, 2, 3, 4, 5. Oh, I can't count myself. Joe, I'll count, and Paulie, and Amanda, and Andre. So these blessings I count every day that I'm working with them. It's made me a better trader. So if it could help someone who's been doing it for decades, I'm going to assume that it's going to sharpen your edge too. So, the best thing to do is at least look into it. I don't think 10 days is long enough to really make a value judgment. In fact, once you become a subscriber, I think you have to give it at least 90 days. I think if you hire a money manager, you have to give it 90 days. Any kind of service. If you don't give it at least a quarter, I don't think it can really be a good evaluation, because, nothing runs in a straight line. The markets don't. Performance doesn't. So you need a little bit longer of a time frame to judge it. And the most important thing to pay attention to when you're judging whether or not to take a service or hire a money manager is what happens when things aren't working. What are drawdowns like? Because you could focus on the blue sky of returns, but if it's a volatile type of situation, you could go through a severe drawdown, not be there for the gravy. So sign up, check it out. A slow week is a great time to do it. Get used to navigating everything on the site, and then don't forget our sponsor, Forest Park FX, and people last week were talking about the rebate checks. Someone in here has gotten 10Ks. Steve said if he talked to Trent, a few months earlier, he would have had a check for $1,000. I said, you didn't need that, Steve. You're trading so hot. What's a grand? It's like a matchstick to you. So give Trent a call. Great guy, and very professional, and responsive, old school. You call him, you'll get a call back, not a text or an email. So that's the way I'm coming into this week. Grateful and looking for opportunities in the dollar on the short side. And I watched Blake's week ahead video, so nothing much has changed from what he was talking about last night. So I already know what you're going to say, buddy.
I don't know what I'm going to say.
It's all right. Just move your lips, and I'll just.
You know what I'm going to say. I don't know what I'm going to say.
Yeah, we'll do it. Just sit on my lap and move your lips, and I'll talk.
I don't want to sit on your lap.
I don't blame you, man. Me. No. Bad idea.
No, it's a bad idea. If you're a female blonde at 26, I might, then that might be a different story. But yeah.
Well, that might end up being worse.
So yeah, no kidding. How's it going over there?
Good, buddy.
Good. Yeah, I hope you had a good weekend. I got to tell you, this has nothing to do with the markets, guys. I'm gonna speak. I got to speak my piece about something. On Friday night with some friends, and Friday nights are horrible for me. I tell you, I'm a train wreck Friday nights. I'm so tired, and I'm usually just after throughout the week getting 5 hours of sleep a night. Friday nights are really bad for me. But some friends that are karaoke friends. They're I say they're our karaoke friends because they are the people that you walk into a karaoke bar, and Dale, you are one of these people, I'm sure, even though I've never been to one with you. Yeah, but these are the people that you walk in and you go to a karaoke bar with this couple, and they both can sing like it's nobody's business. So she sings like like very Broadway type of music, and he sounds like Eddie Vedder, and the two of them are just great. She actually did the national anthem at one of the spring training games.
Oh yeah, I remember you talking about that.
Oh yeah, she's awesome. And anyway, they wanted to go see a Bohemian Rhapsody, the movie, and I thought I'm gonna fall asleep halfway through the movie because it's Friday night, and that was such a great movie. I'm not a historian, a Queen historian specifically, so I enjoyed the movie. I know a lot of critics said, well, historically, it didn't, things didn't match up and the timelines didn't. I'm like, well, from a theatrical standpoint, it was so good. And if any of you have not seen it, it is the last, I'll just say the last half an hour, you felt like you were on stage with the band at the Live Aid concert, which I do remember as a teenager in 1985, as that concert was going on. It was so amazing. It was really amazing. Like I said, it had nothing to do with the markets. I just want to tell you guys, if you haven't seen it, go see it. It's a great movie. I thoroughly enjoyed it. Anyway, let's talk about the markets here. It is really quiet. I traded the dollar yen on the short side last night at the open. You can see the 4-hour candle. I think I shorted it at 77, closed it at 69, somewhere down here, and then I left it alone. And it hasn't done anything. I mean, we are below 113, which I think is a pretty big development. Because equities are weaker, I think it's big that we're down here. I thought we'd get a little bit of follow through, and I'm like, you know what? I'm just going to pull it off because I don't want to, sit around, with an open dollar yen position overnight, not profitable enough. And I'm glad I did because it's right back up to where I shorted it or a little bit higher. So I don't really know what to do with the dollar yen at this moment. My big position right now is just the Aussie New Zealand. If you are a ForexAnalytix subscriber, when I got long down here at the 106, actually I bought it at 106.30 myself, and I've kind of been in and out of about a quarter of the position, but I'm holding on. I've been holding on to the core position. So, and I'm playing it to the long side because we are at the bottom of this triangle, and we get above 107.20, and then we're really talking. We're talking about a move back up to 108.50 at least. But as far as like the euro goes, I woke up this morning and I'm chatting with the guys in the office, and I'm like, I'd love to be short the Kiwi, I'd love to be short the Aussie, but because I didn't short them, early, last night after the China news, I did not. I just was focusing on the Aussie New Zealand, making sure that didn't get out of control. I didn't, I don't want to short them down here, but if you look at the Aussie, we've already got a false breakout. So now I'm going to sell rallies in the Aussie and the Kiwi. As you can see, the Kiwi a little breakout, false breakout too, above this key resistance. So, but I don't want to sell them right now. I mean, I think if I sold them right now and I closed my eyes for like 2 days, I think I'd make money. I think it'd eventually make its way to, like the Kiwi will make its way back down here to 67.50. I just personally, I think that there's going to be a better, entry. I think it goes back up here and then drops. Oh, I don't really like that pink color pen. Hold on, let me get blue. Let me erase. So like this. I think we can get something like that. So I want to sell the Kiwi on a rally. I do that with the Aussie as well if I can find it. So the Aussie I would look for something similar. But that begs the question, well, what do you do with the euro right now? Because I was thinking, well, I wouldn't mind being short some euro dollars, but the problem is we have this downtrend line that you can see it comes in right here. Problem is that if the euro breaks above this 114, let's call it 40, which is the 78% retracement right here, maybe I'll make that. Let me color that fib a little different so you guys can really see the resistance here. Okay, so that 78% retracement, if we clear that 114.40 level, well then the euro might scoot up towards 115 and change. So and if that happens, right, that means the Aussie and the Kiwi could almost probably be drugged back to break even if the euro really starts to break higher. That means the dollar index is breaking lower. So at this point in time, I'm not excited about frankly doing anything. Let me reiterate what I've said in a nutshell, but I'm going to reiterate it again. I really want to short the Aussie and the Kiwi on a rally. I don't want to do it down here after they've gotten hit overnight. I'd rather see them bounce a little bit. And, do I want to short the euro right now? I mean, risk reward has it at the moment to just short the euro right now, just, for me to short it, because all I have to do is risk, 10 or 15 pips. But I feel that the dollar's pretty weak. I think the euro could push back up, and through this resistance. So I'm just kind of staying sidelined at the moment. I'm not excited to do anything. You look at like let's think about the euro going higher. Look at the Swissy. Swissy has absolutely gotten crushed. And here's the here's a support that comes right through here. Basically 99.50. What happens if we clear that support at 99.50? Well, what I think would happen is we're going to see some selling coming in. Yeah, we'll probably see some stops getting triggered.
Mike, I was interested with last week's performance of strength in euro and weakness in dollar. Has it shifted the DSI a lot?
Let me grab the DSI from Friday. Give me 1 second.
Sure.
Let me pause this and I think I paused my screen. Let me see if I can pull up the DSI. I can't remember if I got it. I just can't remember if I
have the DSI right here if you want it. So which one are you looking at?
Euro and dollar still. Because they
So
were like,
euro is up to 20 from 13,
okay,
and the dollar index down to 80 from 85. So it is moving
yeah,
a little
okay,
bit.
a little bit. Thank you,
Yeah,
guys.
and you should be able to see it now.
I see it.
Yeah, so I have it here, and so the dollar index, yeah, I mean we've come off a little bit, but we're still, you know, pretty strong. But things
I'd
are
like to see it
moderating.
at 50, you know, before I would say that we've cleaned out enough of the bulls, you know.
Yeah, I mean they were so extreme earlier in the week. I mean, you remember dollar index was, you know, we were up in the 90s. The euro was down at 5. You know, you can see 6. And we had some really low numbers, and they have moderated. I mean, the euro's back to 20. So that doesn't mean that we can't continue. It's just, you know, and the cable's still pretty exaggerated here at 12. But oops, let me get rid of this. But because it's moderated, it's not, things on the DSI are not so much on my radar at the moment. I'm not, like, you know, extremely worried about, you know, exaggerated numbers at this stage in the game. But I still think, like I said, I still think the euro could go higher. And if the euro goes higher, which you can see it's ticking higher, we're getting close to the highs of the session. If the euro continues higher, it's gonna drag the Aussie and the Kiwi back up. And I looked at, we just hit new highs in the euro actually, and then I just looked to sell the Kiwi and the Aussie on rallies here. So I'm hoping that they'll push up maybe 20 or 30 pips from current levels at this point. And like I said, I am not excited about doing much at this point. I would be actually more excited about buying the euro at this point, because it hasn't moved a whole lot, but it is a shortened week. You guys have to keep in mind that this is a very short week for trading. Liquidity is going to get really poor come Wednesday afternoon. So, you know, most of the trading that you're going to do, you need to get it done basically for the next 2 days, or how should I say, 48 hours from right now. Basically, in about 48 hours from right now, it'll be the day before the Thanksgiving holiday. Things are going to start to really thin out. So if you're going to do business, do some business in the next 48 hours is basically what I'm trying to say here. You know, the cable has been extremely messy. You know, when you talk about like Brexit and what's happening, so I guess the biggest question that I have is who. And Stelios, maybe you can chime in here. Who would want Prime Minister May's job at this stage in the game? Who?
Good question. I think Corbyn really wants it, but that's a different story. It has to go through a general election for him to take over. But yeah, it's a very difficult situation.
Good morning, guys.
Good morning,
Blake,
Steve.
Probably you hadn't heard it because it was, you know, usually you have to go off when I come in. I was saying the same thing last week. I was saying the same thing. Why would somebody want to take the hot potato at the moment, right?
Yeah.
I mean, I believe that no matter what they do, no matter specifically, you know, we have a chat in Twitter because between some trader friends, Stelios is included in that, and Ures and some more people. And I actually wrote to them last week, you know, word to word. I wrote to them that I believe that even if God came down to earth and negotiated a deal, you know, there would still be a huge part of the voters that would be dissatisfied with the outcome, simply because I believe that there is a lot of unrealistic expectations in comparison to what is plausible. That's what I believe.
Yeah, and so it comes down to and honestly, I believe nobody wants her job. So it really comes down to the argument of, are we going to have a deal or not? Because if we don't have a deal, it's going to get messy. And I think that you know, the lawmakers in the UK have to come to that conclusion. It's either we're at this stage in the game. I don't even know if a no contest is really even realistic. I think it's more of, you know, we're going to do a deal or we're not going to do a deal. So I think that's really what it boils down to. And if we do get a deal, then the cable is going to race higher. I don't necessarily want to be buying the pound right now, but I know where I need to be buying the pound. I know that if we get above like this 130.50, 130.60 level, and definitely over 131.50, then it's time to be long. And I almost really want to get long the cable and just sit in it, because I really think that they're going to push ahead with a deal and negotiate more later. Is how I feel about it. But that doesn't mean I'm buying the cable either. I'm just kind of talking out loud. But yeah, I mean, I'm not long the cable, but my gut instinct says I need to be long the cable at this point. So anyway, a couple other things. So here's the dollar Canadian. I wanted to point out the dollar Canadian because if crude continues to hold at this point, I think the dollar Canadian is at risk of breaking down. I think the pound, the dollar Canadian is at risk of breaking this trend line. But as long as we trade above like 130, which is not too far below where we're at right now, but as long as we trade above this, you got to be on the long side. We get below 131.20, and it's gonna be a bearish event. So, and because crude is still holding, I think that we might risk breaking down here. I don't know. I'm not long at the moment. I'm on, basically watch to make sure that this support holds, and I just put an alarm in there just to watch it. The dollar yen, not doing anything with the dollar yen at the moment, and stocks. Stocks are obviously a little bit weaker today, but I'm not really too sure what to do with equities either. I think equities are, kind of waiting for the end of year push. Maybe is what is going on. So,
Santa Claus rally, eh?
What's that? Yeah, maybe
Santa Claus rally.
Yeah, I think so. I am a big believer in seasonality. I don't know if it's going to work this year, but I still believe that the market's going to make a push for the Santa Claus rally, which will be December 10th or 15th, somewhere in that.
It's funny, guys. Last week before the turn on Thursday, Art Cashin came on CNBC and he said, "Looks like Santa Claus is on a milk carton."
What's that mean?
Oh, missing.
He's
lost.
Yeah, he's lost. Yeah. I actually do believe that we are going to get a push. So if you think about like December 10th through 15th, wherever we're at here, we might get a couple of days. Everybody's like tries to play into that. Oh, here we go. We're going to rally. I just don't know if it's going to be sustained. I think the stock market is broken. So even if we make it, towards this resistance up here towards, 2,800, 2,820, maybe even a little bit higher, I think it's just going to fail. So
a lot of people are calling that a head and shoulders now, Blake.
Big inverted head and shoulder pattern, but I think it's
a fake breakout, whatever it is over there, if it happens.
Or I think, guys, that another thing that can happen is that we might have some kind of a consolidation, like a big triangle or whatever, and perhaps the catalyst for the next leg lower might be the Fed's meeting on December. So if we do get the hike, then I think it's the 16,
17, I think.
Yeah.
Like 16, 17, yeah. Okay. Cool.
Yeah. So if we get a hike there and we don't get a lot of dovish wording along with the hike, I'm afraid that this year the Christmas period might sour for the usual Santa Claus rally proponents, right? So I think we should pay close attention to that.
Yeah, for sure. All right, well, Steve, good morning. Stelios, good morning. How you guys doing?
Good morning, mate. Good. Bad weekend because I have a son that's like very high fever for 3 days, but it's okay. We'll, it goes with the territory, as you know, Blake. You've been through that.
You know what it does with grandchildren too. because they'll get
I'm sure.
and then my wife will, and then my in-laws will. It travels from every household.
Oh
It's
God,
amazing to me. Amazing.
it's really, you know, I really appreciate the ages once they get to about 7 or 8, and they really know. Well, that and they know how to wash their hands.
Oh yeah.
You know,
Yeah.
and that's, you know, my kids are really good about washing their hands now, and it really prevents a lot of stuff. So anyway, I'm going to pass it over to you guys. I hope everybody here has a great trading session and a good day. So thanks everybody.
I need a little bit of help. You know that I had something to attend to, so I wasn't here since the beginning. Can you tell me what you covered so I don't go over it again?
You know, I didn't really cover a whole lot. I covered more of the euro dollar. You know, kind of like it looks like it could break higher, and I think the Aussie and the Kiwi. Yeah, I think the Aussie and the Kiwi look like they're good selling prospects, but only on a rally. I don't really want to be short here, and that's it. I mean, it's kind of quiet at the moment, and I didn't touch any of the crosses. So
okay.
Right.
I'll talk about the rest then. Okay, thank you, mate. Talk to you later. Bye.
Stephen, before you talk, can I mention one thing, please?
Absolutely, Stelio. Anyhow, as Blake said, for a change, we've had a slow start of this week. Yes. So yeah, it's absolutely. We have the time. Go ahead.
Yeah, and Stephen Stelios are Santa's helpers. So they're driving around Athens on their reindeer sled right now.
I'm too old to be an elf. I'm too old. Okay.
You're too old, full stop.
Yeah.
All right, Al.
So, just for the people who haven't been, who aren't completely caught up with the whole Brexit soap opera, we had this morning, Theresa May announcing or saying that there will be no extension to Article 50. So the end of March 2019, as things stand, is the cutoff date, and whatever's been agreed until then has been agreed. Interestingly, I don't know if you were around, Steve. Cable was at highs of the day at the time, 128.80 or something like that.
And it's currently unchanged actually, and it got higher yesterday. So in essence, we're higher than where we closed on.
Yes. Well, on the news, it went down to just sub 128, so it went down like 80 pips. But then it's slowly grinding back. So
you know something, Stelio. I hope she's right, because that means that the drama should one way or another get resolved within 4 months and 10 days. So I think everybody's going to be relieved to finally get something, so we know what we're standing.
Yeah, remove uncertainty. Yeah. Even if what you end up with something not good, at least.
Yeah, at least we can price it in fast then and move on from there. Yeah.
Yeah. So that was one thing. What else? Oh yeah, there were. This weekend there was a report by one of the UK newspapers which is pro-Brexit, and they were saying that there were 40 or 42 signatures already made for Theresa May, and that was it's definitely looking like this vote of no confidence is coming. But this morning we had another report that said that only 20 are in. So who knows? I don't know, and I don't think anything is official yet. So until there is a vote of no confidence, we know nothing. I still think it's most likely that it will happen, but that's another part of the saga that we have to keep watching. And in general, Theresa May was speaking at the CBI today, and she was trying to get support from businesses, to support the plan and everything. And she did say in kind of a sideways way that I don't remember the exact text, but she did say that this is a deal that we brought. If it's not the completely final deal, we can always have a look at details. So she left it a little bit open, but then again, we had some comments from EU officials saying that this is the deal, take it or leave it. So I don't know what to say anymore about this thing, and I'm really fed up with all the the headlines and all this.
As I said, logic says that logic says that it makes no sense to remove her from office, because Theresa May was perfectly placed to be I don't think it's insulting. I'm going to say it exactly as I think of it, like a condom politician, meaning you use it one time and you throw it away. She was never a politician that had the caliber to become a prime minister, but that means that she can take the blame for whatever doesn't work right, and then somebody that actually is more fit to lead the party can take over, considering a given whatever has happened with Brexit, so they don't have to take the blame or the fall, for whatever the people are not happy with. So I really don't get why they would want to overthrow her at the moment. I don't think that whatever deal comes in the end is going to be something that's going to have the vast majority of the people happy. So I think they should just help as much as possible to get some kind of a deal and move on to the next day, because as you said, removing uncertainty is going to be a huge step towards the next day, right?
Yes, absolutely. And there's another comment I read, which is actually I agree with, is that we have this potentially vote of no confidence for May. Even if that happens, it doesn't mean she's not going to win it. So it might actually bring her into a stronger position within her party.
Yeah, because if he actually wins, a no confidence vote, then in essence you remove the possibility of another challenge, because they're not going to challenge you before March again. Before March at least, that and if she sticks to what she said, that they're not going to postpone the end of March deadline, that means that in essence that issue is out of the way until we do have some kind of a Brexit deal.
Yes. Okay,
perfect. Catherine actually provides some useful insight. I think she says the cable plans was because the Spanish foreign minister threatening to boycott the Brexit agreement over Gibraltar.
Okay. Interesting.
Actually, I hadn't read about it, but I had quite a busy weekend, so that's not a surprise. Okay, so let's go. Let's go. Thank you. Yes, she always has very useful insight, especially to British developments. I'm guessing that she's from the UK. That sounds like a live webinar on YouTube. Yeah, we fixed the thing with sound on YouTube and Twitter live feed. So thank you very much for giving us that input. Okay, so let's go to the charts now. Stelio, I saw that Blake very briefly mentioned the USD yen. I just want to mention here that we closed on Friday right on critical support. So far today we seem to be holding it, but I do believe that if we lose this area of support, the USD yen is going to be hitting 111.50 very soon afterwards. And if we do break below 111.50, my next target is going to be roughly at 110, 1977. So I think that we're getting close to some confirmation of some bearish price action, and that's one of the things I'm monitoring, because they can develop at any given point of the day. Even today, as I said, we're actually exactly on support. The same deal with the Euro USD. I know that Blake covered it, but I don't know exactly what he said. I have a double confluence of resistances here. It's the 38.2 of the last move lower. It's also this descending channels resistance that I'm watching. So I do believe that the break above 114.50 is going to open more upside. The next target is going to be the confluence of the previous high here and the 61.8, which is almost at 116. And after that, it's the 118.15 area. Now, having said that, and for those of you that are not ForexAnalytix members or haven't checked that, it's quite important to see some candles that we got to end the week. This is the DXY. So this is the DXY chart on a weekly basis. Now, on the DXY, we actually had a bearish engulfing, and that was also a key reversal day. A key reversal week. So this is a decently powerful combination of a reversal candle. After breaking above this ascending triangle, we did get one more thrust, which is what you expect. It lasted less than expected. So be careful here, because as I said, this is a powerful reversal candle. And, I wouldn't be surprised if we saw some follow through to the downside. As you see, it also it also plays well with the RSI divergence that we had on the weekly chart. So this is something to keep in mind, because the DXY is in a big part 58%. It's the euro. So I think that this divergence that we see tells us that there is a decent chance that the euro USD is actually going to break higher. Now, I'm not so bullish on the cable, simply because one way to interpret this price action is a possible triangle after a clearly impulsive move lower. So this might be a triangle, in which case I would expect that a resolution to the downside is a quite likely scenario. Obviously, a cable is very much driven on news, and that's why I want to stay away from it. But I can tell you one thing for sure: I will be very tempted to trade it once we get a breakout. Keep in mind that statistically proven, breakout trading in the direction of the trend is the most profitable way to trade, right? So, even if you...
Steve, perhaps a lot of people getting back on the euro pound train, that's another way to be short the pound.
I agree with you,
long
Let's have a look at it.
Yeah, let's have a look at it. Huge week last week, and
it had a huge week, and not only that. Yeah, not only that. Just look at it. We had, we moved higher. We then moved lower, but in a channeled manner, as you see. We found support at this very important support area. And actually, so far today, we tested the previous high. We attempted to break above the descending channel. We're not confirming yet. Actually, the fact that we got rejected from there is not a bullish sign in the short term.
Right.
But if we see something like this, let me draw it properly.
Yeah, maybe he pulls back. Yeah, okay, that's exactly, you're a mind reader. Okay.
Yeah, so if we see something like this.
Yeah, like it.
Yeah, that's going to be a very bullish development, right? If we get something like this to play out. So, because the move higher was extremely strong, but to get a confirmation that this is a resumption, if you want to be, there are several ways to trade something. There is, you keep saying that I'm the confirmation guy, which isn't true in meaning that sometimes I intentionally jump the gun, but when I do that, I only do it by starting to scale in. I'm not going to jump the gun with a full position. That I'm almost never going to do.
Yeah, you're get you to pay attention to the instrument.
Yeah, but but if you want to go a full position in at some point, what you need is confirmation. So what would be confirmation in this case? I think it's very simple. It would be a higher high, which we need to break above here, which we got rejected for now to see, and the close above the channel. A close above the channel and the close above that. I think that if we get that, the chances of quite a strong follow through are quite high. And to be honest, so far, this interpretation doesn't mean it's going to play out, but this interpretation seems to bode well with the divergence that we see here, because as I said before, the Euro USD seems to be attacking quite an important confluence of resistances, while at the same time the cable is trading within a triangle, which triangles, by definition, roughly 65 to 70% of the times get resolved in the direction of the previous trend. And we seem to be trading here, and we seem like we might get resolved to the downside. And I remind you, the reversal in the DXY can actually keep on playing if we do get a strong Euro USD. Even if the cable is weaker, because the Euro USD is a much bigger component to the DXY than the pound is. Much bigger component, like roughly, I think, 3 times the weight in the DXY than the cable. So the DXY can easily keep moving to the downside, even if the cable is underperforming, as long as the Euro USD is doing okay. So, that possible interpretation can lead to quite a massive leg higher in the euro pound. But as we said, we have a very well-defined resistance in the euro pound, and that's what I'm monitoring now. If we do get a break above there, I think that the chances for a resumption higher are extremely increased. Now, having to do with the Aussie and the Kiwi, the Aussie played perfectly. That's what we drew when we were testing that resistance. I actually drew that, you know, a pullback towards the 71.60 area will be an excellent chance to rebuy it. Did I do it? No, I didn't. I was involved with other positions. In my opinion, I stupidly didn't do it because that's exactly what I had drawn, and I felt quite good about it. I just didn't get involved with it. And the same thing exactly applied to the Kiwi. That's what I had drawn. A pullback to retest this area of support resistance would give a good opportunity to push towards this confluence of resistances. And why is this a confluence of resistances? Because if I zoom out, you can see that this area has acted as support resistance multiple times in the past, and now the 200 DMA has also converged to the higher area of this exact same zone. So two things you can take from here. First of all, this is not the area to be buying the Kiwi. As you see, this area actually did produce this nice rejection so far today. Of course, it's early in the day. So can we actually resume to the downside straight from here? Yes, we can. But to be very honest, I do also see the potential of a resumption higher as long as we penetrate through the zone. So personally, I think that the opportunity for you to be buying the Kiwi was either A, when we were breaking above this descending channel, or B, when we came down to retest. This is actually called the throwback because so we can speak some technical language. Pullbacks are called the retests when you're in a downtrend. Although I know that very usually we use the term pullback in either case, but officially when you get a retest, a pullback to retest in an uptrend, it's actually called a throwback. So you know, this was a throwback to a perfect level and then a resumption higher. But now, as I said, we're facing strong resistance. So you either bought it at the throwback here or at the breakout here. Personally, I would be very hesitant to be buying up here on resistance after having already had a 500 pip move in quite a short period of time. My gut instinct tells me that there is more upside both for the Aussie and the Kiwi. I just don't know if it will come from here or perhaps after a deeper correction first. So my gut feeling tells me that now that this has happened, we can delete it, that we might get something like that before a resumption lower. Okay, but you know, gut feelings don't matter a lot. I mean, I pay attention to my gut feeling, but unless I get confirmation from the price action, you know, I just put it in the back of my mind and don't do much more on that. Now, same thing with the Aussie. I mean, we might get a breakup from here, and I think we might get another rally higher before we get a resumption of the move lower, if even that happens, because of course I'm treating these moves as a correction, but don't forget that even the bigger impulsive moves initially start as a reversal of the previous trend. Of course, you should never be assuming that any reversal is actually the reversal of the previous trend. You should be assuming that when you have a trend, any move counter to that trend is a counter trend move. Why? Simply because statistics say that you get big reversals rarely, while you get pullbacks often. So it's simply a matter of approaching it, you know, mathematically. Now, when can you assume that, you know, a move to the other direction, a counter trend move, is actually an impulsive move instead of a corrective move? When you actually see some type of an acceleration that does not fit the characteristics of a corrective move, right? So that's where the whole game is being played, meaning recognizing the characteristics of an impulse as soon as possible, so you can then be looking for throwbacks or pullbacks, depends on the direction of the trend, to go to the other direction. And if you do that rather soon, that means that you will have a very good reward to risk reward ratio, because you know you will still be quite at the beginning of the new trend. But you know, this needs experience in the markets, and of course it's also trial and error. That's why, you know, we always use stop losses, because of course you can be often wrong, but if you have the right reward to risk ratio, you can be wrong even half of the times, 50% of the times, sometimes even 60% of the times, and still end up making money. You would really appreciate my view on the WTI. Actually, unfortunately, this comes a little bit late because when Blake talked about the WTI in conjunction with the with his view on the USD CAD, we were still almost unchanged on the day. And what I wanted to say is that, you know, I was long on crude, and I actually booked earlier today while I was on the meeting the rest of my profits, which in essence, you know, I made out for the loss that I had, the previous attempt I had to be long, and just a little bit of a profit. The reason I did that is because I don't like the way crude has moved higher. I mean, 3 candles, all of them show hesitation. Just look at this. First candle higher, it's a pin bar. Second candle higher has a rather long upper wick. Third candle higher is a spinning top. So, you know, if this was, which it can still be, but, you know, if this was like a bigger rebound higher, which it can still prove to be, I would have wanted to see people that were short crude being a little bit more scared, starting to cover positions, which means that it should create some kind of an acceleration. I would have expected that at least the first area of resistance, which is here at 58.60, would have been retested quite faster just because of short covering, as I said. The reason that after 3 days, the market was still very hesitant in rallying is not what I wanted to see. That's why I took my profits here to make up for my previous loss in my long attempt, and I'm more than happy. It's still early on the day, but the price action I see so far perhaps will vindicate what I'm thinking of, is that perhaps we have more downside before a bigger correction higher. Perhaps we need to break below the 61.8 to completely get everybody that's bullish to capitulate, because this candle lower looked like a very nice capitulation, and it did work out for 3 days. But I want to see how we're going to close on the day, because as I said, this move higher looks corrective to me, and definitely not like some kind of a strong correction. So let's see how we close the day. But so far, I have no reason to be bullish. I'm tilted towards seeing more bearish price action here. Now, having to do with the metals, gold definitely made a very nice recovery here. Morning star formation, that's a very nice and from my experience, very potent reversal formation. As you can see here, we've had continuation. This perhaps opens the door for another move higher for gold, but regardless, even if that happens, I do think that this is a correction. And having to do with silver, silver is retesting previous area of support as resistance. So let's see what happens from here. I think it's a critical level. If silver gets rejected from here, that's going to be very bad news. Now, if it actually makes it up to 1470, 1480, then we will be able to speak about the double bottom formation, and that should technically open a decent amount of upside, because in essence then we can project an equal move higher as this double bottom formation, which would roughly take us up to this area of resistance, which is roughly at 1570. So of course, for all of that to happen, we need to see a daily close above 1470, 1475, somewhere there. And in that case, we can be bullish for a period of time for a move towards at least this 50% fib. The 200 DMA, from what I see, is also converging there. So by the time we're there, we might have a nice double confluence of resistances up there. But I don't want to be jumping the gun, because as I said, if we get rejected from here, I think we're headed to new lows from where we are exactly. Now, this is the definition of a pullback. Platinum broke below this ascending channel, which had very corrective characteristics. This so far looks like a pullback. We're retesting this previous high. We're also retesting this channel's broken support as resistance. So if I do see a rejection from here, I think that the next target for platinum is down at $805. Copper still in what appears to be perhaps a triangle, so I think more patience is needed here. Might also prove to be something else, but definitely this is a corrective move of some kind. The problem, as I've said plenty of times with corrections, is because we have multiple types of corrections. I mean, even if you take it from an Elliott wave perspective, Elliott wave theory, or the wave theory as Elliott had named it, says that there are only two types of motive waves, right? It's an impulse and a diagonal. It can be a leading diagonal. While for corrective moves, we have multiple possible corrective moves, and that's a good way of also seeing things from the basic technical analysis perspective, which means it's rather easy to recognize an impulse, but it's very, very hard to recognize the form of a correction. You can recognize that it's a correction, but recognizing the form of the correction until you get enough of a price action is very hard to do, because let's say a triangle can transform itself in a flag or in a pennant or whatever else, right? Or something that begins like a flag might end up being a triangle because it prolongs its price action more, etc., etc. So
according to Edwards and McGee, what we're looking at right here is an ascending triangle, and they can be reversal formations, just like descending triangles are potentially.
Coach, you know how much I respect your outlook for the markets, but I'll have to disagree with you, because according to them and to basic technical analysis theory, this is actually a symmetrical triangle, because a symmetrical triangle is a triangle. It doesn't have to be actually symmetrical in the sense, that the angle of the upper trend line is the same, the opposite of the angle of the lower trend line. What has to happen is that both the trend lines of the triangle, neither of them has to be in the same direction. So since this is even slightly descending and this is ascending, this is considered a symmetrical triangle and not an ascending triangle.
Looks pretty flat to me, but I don't have my contacts in.
It's almost, but by definition, it's considered symmetrical.
So, no, you technical analyst.
Yeah, yeah, indeed.
All right, buddy. Go ahead.
Another useless information, because it's also recognized, a piece of information, because it's also recognized from English bibliography. You can also call it an isosceles triangle. Isosceles.
Oh my God!
It comes from this isosceles, which means isosceles. Yeah, okay. Which is the same. Yeah.
I got a D in geometry.
Yeah, it comes from isosceles, which means isoscale, which means equal sides. So it's the Greek word, but as I found out recently, actually it's also being used in English, but very rarely. So it's very hard for somebody to come across it.
Taught that. Yeah.
Yeah.
I failed.
Actually, I used to love geometry because it's
the markets are geometry.
Absolutely.
Little did I know that what I didn't like in high school. I mean, I do it for a living, geometry. So.
Thank you for your comment.
And Steve, before you leave the chat room today, because we're a family, Gwen sent you some advice. She's a nurse and a mother of 3 about Jason. It's in the chat box. Maybe you should check it out. She cares.
Yeah, and
Gwen Noak.
Unfortunately, he's not here. She's not here anymore.
But her question was, her answer.
Yeah. Thank you very much for caring that much. Yeah, we're always on top of health issues. He has already had the pediatrician look at him twice in 3 days. So we're on top of things, and thank you very, 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 very much for your kind words. Thank you very much.
Those moms.
I strongly appreciate it. Yeah. I know anybody that has a child knows the feeling.
Yeah.
You know, you can, everybody knows it. I mean, once you get a child, you really realize that, you put yourself, last. Yeah. And it's
Your
instinct.
wife
It
does
happens.
too. Puts you last
Okay.
now.
No, actually,
Have you adjusted?
I actually have no complaint. Believe it or not, my wife seems to care equally about us, which I didn't expect, to be honest, because it makes sense that as a mother, she would put her child first, but she seems equally worried when there's something wrong with me. So, my wife probably I don't deserve her.
Yeah, probably. All right. Well, we have an interview today, buddy.
Enjoy it.
Okay.
We'll
So, yeah, I'm looking forward to this one. Great review as usual, Steve.
Okay. Thank you very much.
See you tomorrow.
See you tomorrow, Coach.
I'll see you at the meeting today.
Yeah. Oh, yeah. That's true. Actually.
Alan, how are you? I'm now passing you you will control our television set like the Outer Limits. I'm making you the presenter. Looking forward to meeting you, buddy. So your screen is coming up now. Let's see. Check your volume. You're calling in.
Cool. Good morning, Dale. How are you?
Alan, great to meet you.
Nice meeting you. You can hear me all right?
I can hear you all right. I can hear you fine, loud and clear on this shortened week. Really appreciate you taking time to talk to us and be here in face. And I usually like to start with people I haven't interviewed before with, taking them back to the beginning part of their journey in trading and how they ended up in the industry, and who were their influences to, help them get from point A to point B. So what were you doing before trading, Alan?
So my career started in IT, and it was even a circuitous route getting to doing PCs and computers and what have you, because I went to college for English. But what I learned in college was that if you can read something and if you can practice it, you can make a skill out of it. And that's how I ended up in IT. Also tried to use that approach as I started with trading. So after many years in doing computing and solution architecture, and by the way, can you see my screen?
I just took your screen off because it looked just like a blank screen, but I'm going to give it back to you. Okay, I didn't know if you had anything to show, so I just put
I was going to try and share something today. But,
okay, I'm making you the presenter again, so you could share your screen now, Alan.
Let me see. I have a couple monitors. I don't know if that's screwing me up or not.
Okay, so I see now we see the charts of the crude
monitor.
the crude dive off Niagara Falls in a barrel.
Yeah, sure is. So anyway, from IT to trading, I started getting interested in trading in 2002. And what I try to do is use the same approach to trading that I did in building a career in IT, which is I said, all I really need to do is read and learn from all the smartest people, try to leverage and copy what they do, and apply to the markets.
Who were they?
So I started out looking at Timothy Moore's, looking at pitchforks. Well, I guess where I started out was just the traditional kind of indicators I think everyone starts with on technical analysis, right? Which is, your MACD, your RSI, moving averages. Started reading from Van Tharp and reading about the importance of position sizing. Actually, I probably started on that part first. That's probably the most important thing. I remember
that was self-discovery.
Yes, I never had the luxury of having a mentor who came from a trading profession. So I let the market be my trainer. Which it's an expensive education potentially, but it's the best one, I think.
Well, you always hope that it's more for like a state university instead of Ivy League.
Right.
Your tuition, right? Yeah.
Correct. I'd say I'm probably somewhere in the middle. I remember listening to one of your earlier interviews. You had asked someone if they had ever blown up an account before. So in the spirit of full disclosure, when I started in 2002, I blew up an account in 2004. As I started to trade, like I said, that was not unfortunately the first thing that I learned about. And I got very interested in options. And I got attracted to them because of the leverage. But I blew up that account because I didn't appreciate the value of position sizing. So I learned that the hard way. That was a good education for me. But what I really learned, which is really what I want to share with you, which is The biggest thing I learned, not just from blowing up that account, but also between 02, I'd say, and 04, 05, and the first 3 years or so of trading, is that my approach to learning these indicators and trying to build systems the way that I've done in IT, that was not going to be successful. They are just a manifestation. They are nothing more than the lines and the symbols that your brain can use to try to help you understand really what's on people's minds in the market. In other words, my real goal and what improved my trading enormously is when I stopped looking at the specifics of the indicators and started looking at them more in the context of what's
price.
The message of the market. Price. What is the market really trying to tell me? In other words, if we're seeing a reversal on something, why are we seeing it? What does it really mean? What are people thinking about? And when you start looking at correlating the different markets together, even though really my focus in trading is purely Forex, but trading, looking at all the different markets together, then I was able to start really improving my trading. And the good part is it's made me a more successful trader. At the same time, if I can't weave a story, and I'm just listening to the webinar of you guys this morning, you're weaving a lot of stories, right? You're looking for all the different relationships between different markets. So if you can't weave a story, you can't, narratives. That's a perfect word for it. If you can't do that, then you can't make a trade.
Right, because a narrative will give you a bias, right, Alan? A narrative will tell you what you should be looking for potential trading opportunities. If you don't have a narrative, it's a random walk.
Yeah, which some folks might say you're better off throwing a dart up on the dartboard and giving that.
Yeah, let me ask you something. In your options experience, were you writing them or just outright buying them? And because I used to have an expression that options are like relationships; 90% of them expire worthless. So, and I bought and I bought many of those. I've done it. I used to be an outright option buyer. Was that what took you down? Was time erosion and dealing with a market that might not have could have been going your way, but took too long to get there?
It's a great question. So my dad has been an active trader his whole life. So I grew up with some exposure to finance and trading my whole life, and he's been a covered call writer for forever. Okay. But I decided I was much smarter than that, and so what I wanted to do was more directional trading. And so I would try straddles. I would try buying just outright puts or outright calls. And yes, the time expiration value, but also, I had an options calculator, and again, I was trying to mimic what I'd seen other people do. But the truth is that there's so much mathematics going on there that after I blew up that account, I said, you know what, this is probably not for me.
Yeah, that's a good signal.
Yeah.
So
the thing I love about Forex.
Yeah, you went to Forex.
I'm sorry, go ahead.
Options. No, that's great. No, that's an excellent point. So, I've interviewed Schwager, and he says, find a trading style that suits your personality. You also have to find instruments that suit your trading personality.
Right.
So that's what you
my
did.
Trading personality, it turns out my trading personality is a lot longer term than I thought it was. Because when I started out, I was trying to do day trading and even swing trading, but I learned pretty quickly that longer term trading, more position trading, was actually more my style.
Okay.
And so most of my work happens on a weekly chart. I look at the dailies and the monthlies. It's important to look up a time frame and down a time frame for clues and signals. But I find that longer term trading and position trading suits me better. And what I do with Sea Lion Capital, I actually started out as a registered investment advisor. So I got my Series 65, and in 07 started managing other people's money. But what I saw and what got me out of that, and I decided to get more on the education side and trading my own money only, is honestly, for the kinds of clients that I had, they were better off just, signing up with Betterment or something like that. I couldn't justify taking the percentage that I needed to make a living out of this. Versus, essentially, it's ironic that a guy in IT, I think I was pushed out of the business by a computer. So I would encourage people who need that type, unless you're pursuing very high net worth clients, which I didn't have those kinds of resources to do. I don't think it made any sense. So
well, I've done both, Alan. I seem to be more emotional in my decision making with OPM, other people's money, than my own. Were you like that?
Well, what I try to do is I try to be more mechanical. Again, being an IT guy, I'm very systems oriented. Everything I do actually in my life, I try to build systems around. But I learned, again, that the lesson I learned early on in the first few years was it is more emotional. That money decisions and finance decisions is more about opinions than emotional. If you want to have an opinion on what's going on with Britain right now with Brexit, it's very hard to have a factual opinion. Try to identify a system that's going to tell you what the answer of what's going to happen there into 2019. It's not there. You can have an emotional opinion, and they're more valuable than the scientific ones. And so the indicators, you see some indicators on my screen, and I use others. I like to look at pitchforks and Fibonacci and all this stuff. But that's not the way you make a trading. At least that's not the way I make a trading decision. I read those things, and then I try to take a step back and say, okay, what is all this saying? And if I can't come up with something, I don't make a trade. I'll be very honest.
We, talking to position traders are, probably a fewer percentage. Most are swing traders that I know. It takes a lot of patience to be a position trader because it's hard to sit to targets with all the, the long and winding road to an objective. So do you manage your trades on a higher time frame than you enter a trade on, so you don't notice all the noise?
I always enter on the weekly, but I look at the daily and the monthly for clues.
Okay.
Yeah.
So what are you seeing here, Alan? I mean, we've had a lot of. I'm kind of interested if we can make a transition. You have a crude chart up here. You're a position trader. We have this very dramatic fall here. A lot of people are starting to say that there could be a bounce, whether it's from last week's low. I know someone looking for my 5250 or some first. Are you looking for some type of recovery in crude, or right now that's just a guess?
It's a great segue. So I don't have an opinion per se on whether we're going to get a bounce. What I would show you on this chart, and I'm taking some Forex charts with it, is why I asked myself, so why is crude falling the way it is? And if I look back at the economic calendar, actually back in September, right about when we started to see, or in October rather, when we started to see the fall, there are 4 manufacturing reports that week. One was France, one was Germany, one was China, one was the US. 3 out of the 4 were misses. The US one was pretty much spot on and was a little bit positive in another respect. And since then, oil has really been crashing. And half the crude oil, roughly, is turned into gasoline and diesel, and the other half is used for a variety of distillates. But really what drives, in my opinion, crude oil prices, I mean, there's a lot of political factors, but often what's driving crude oil prices is whether or not markets believe that manufacturing is on a good track. So if they believe there's economic growth and there's healthy manufacturing, that is very bullish and supportive of oil in general.
How about the weakness or strength of the dollar?
They are inversely related.
Okay.
Right? So when you see oil pull back, you'll see a rally in the dollar. So you're reading my mind. You're ahead of me now. So
all right,
now,
sorry.
No, not at all. So now we've seen an environment where over the last 5-6 weeks, we're seeing crude sell off like crazy. And we can see the nature of the sell off, by the way, is very corrective, right? Because it's very sharp. Usually when we see trends, they're long and they take a long time to get up to their peaks, but correctives come down, like waterfalls. And that's the nature of that fall right there.
Down, it's gravity. Down it's faster. But,
right.
But some Elliottians
goes up like a hot air balloon and goes down like an airplane.
Yeah, but sometimes, Alan, Elliottians would say that a sharp directional move is impulsive rather than corrective. So that Elliottians would have a different view on this, saying that it's because it happens so fast. Impulsive moves are getting from point A to point B in a hurry. Corrective moves are, sometimes they'll correct, overbought, oversold in time and not as much in price. So just wanted to point that out, that some people would say this was impulsive, not corrective.
And it very well may be. I guess what I'm saying is I think it's just too early to tell. I don't know yet. But what I do know is that the negative sentiment, the negative sentiment around the global economy and around manufacturing specifically, I think over the last several weeks, it's starting really in the beginning of October, that's really when the theory, I think, changed. I think that's where this negative sentiment came in, and I think that's what's pushing crude lower. And that also pushed the dollar higher. So the other charts I want to share with you briefly, right, and we're kind of moving to some other markets, is those countries that I just mentioned, right? Their markets have been brutally, this is Germany, right, have been brutally under attack.
It's like
all year they've been selling off. That's like the DAX, and we can come down here and look at China.
Yeah.
Same kind of situation, and we can also take a look at Japan.
To the upside.
It could, right? The ascending triangle.
Yeah.
I heard your conversation about whether it's a symmetric triangle or ascending triangle, and one of the challenges with chart patterns in general is it depends on how you like to draw the lines and where you like to draw those lines.
Yeah. Well, that's why I call some technicians technical analists. They're so anal about every little thing that, anyway.
Well, no, I think it's an important point, because I think you need to have a theory that will help you draw the line. Don't draw the line and then pull out the theory. I think that's backwards. So what I try to do is I try to come up with the theory and a premise, and then the line is there. And I'm like, oh, okay, that's confirming the premise. If I can't draw the line that confirms the theory, there's no trade. I can't come up with something rational that nothing makes sense anymore. In fact, just again, in the spirit of full disclosure, the Kiwi has been the hottest thing in the currency market for the last 4 or 5 weeks, right? I mean, the Kiwi's
it's held up like a champ during all of this turmoil.
Right. I got to be honest with you, I missed most of those trades. That was a trade that moved so fast and did not make any rational sense to me. I knew that there was some better economic news coming from New Zealand, but the RBNZ had not been talking about raising rates. If anything, they're still playing with the idea of possibly cutting rates. So anyway, I didn't see that coming. But getting back to this. So the premise being that here we see negative sentimentality, but it's very possible that perhaps this is coming, because I'm looking to trade the CAD. I'm trying to figure out how can I trade the loonie. The U.S. dollar or the U.S. economy doesn't play specifically into this theory, because half of the crude that we import from Canada. But those other 3 countries, they import from, Saudi Arabia, Nigeria, Iraq, all those kinds of countries. So very different situation. They don't get the benefit of shale oil like we do. And you know that when price gets down to about $50 or so, where it is now, 50, 55 bucks, the shale oil producers don't make money anymore. True statement?
I believe so.
Yeah. So they need prices to go higher.
I learned from my guests. Now I know that.
Yeah. Somewhere right around between $50 and $55, the shale oil guys don't make any money anymore.
Also
production. So much energy. Yeah.
Okay.
Production.
Yeah.
So,
all right.
So, and now we have Saudi Arabia last week talking about they might cut production. They might get OPEC to try and reduce their production. So this would be
I'd rather have them. You know what, Alan? I don't like to be political, but I'm going to be. I'd rather have the Saudis cut production than cut up people.
Right.
How about that?
That's for sure. Yes, that's for sure.
So go ahead.
So what I'd like to do now is let's go and take a look at, for example, Aussie CAD. So with that premise in mind, right? And the Aussies had this huge reversal. Now we actually see that I have a support and resistance line identified at 96.5. 96.5 is a really important level for me, because 96.5, if we come back to December of 2017, it stopped here.
Right.
If we come all the way back here to January of 17, it stopped here.
Beautiful.
Now, I have not gone back and looked at some of the economics of Australia and Canada going back that far, but just looking at the chart, this would be a rational, logical place for price to reverse. And if we think that perhaps the market sentiment and trader sentiment is, you know what, we've kind of beaten up on oil enough. It's been down quite a bit. Manufacturing is not as bad as all that. The economy's still pretty good. And by the way, Canada's economy is doing pretty well outside of the fact that oil is getting destroyed. Their services sector, other parts of their economy are doing quite well.
Okay.
One of the benefits, by the way, of being a position trader is you get a chance to read all these economic reports. You get to read some good stuff,
right?
Because you're not on the screen all day trying to push the button.
Do you ever scale into a position, or it's one position, that's it? Set your stops and your long-term targets. Sure. But as things change, probably your stops move around to limit risk even more, to break even when it's in your favor. And even a position trader, I think, needs to be able to take partial profits. Do you?
I do. In fact, those who get my newsletter, they'll see exactly what you're talking about. So I use kind of a 50-50 method. So when you enter a position, you can either enter in for half or you can enter in for full. And as you're looking to take profits or take your losses, you can take out half or you can take full.
Okay.
And I try to tie all that back to the theory. So I can tell you right now, for example, I've taken half a position on CAD yen. Here, I'll show you what that looks like. Well, anyway, just finishing up with Aussie CAD though.
Okay.
Aussie's had a pretty nice rally as well. The Aussie also is, I think, potential for reversal. I do think the euro the dollar, by the way, is going to get weaker. I think the Dixie has run out of steam, at least for a while. And so this would be a rational, logical place to see a reversal, and we're seeing some overbought. If we look at CAD yen, I dipped my toe in the water back here after this big push up above this 86 level. Kind of same idea. See right here, so 86 is an important level where prices swung through before, and it stopped over here as well. But I think oil's been beaten up enough that it's time now perhaps to start seeing some bullish activity. So yes, I took a half a position on CAD yen. Also, by the way, because while most of the world is raising their interest rates and strengthening their currency, the Japanese are not interested in doing that at all, right? They want a weaker currency. They're completely export driven, and so they need their prices to be competitive, and they're under massive competition from South Korea and China. So they need to keep their currency a bit on the weak side all the time. But right now I'm behind in this position a little bit, but
okay. So a lot of your recent positions are predicated on crude is way overdone to the downside. There's going to be, in a month or two, some type of recovery in crude, and you've made the translation to these pairs, and then when you throw the yen into it, you're talking about perhaps the decline we had in U.S. dollar yen, or the strength we had in the futures, isn't going to be long lasting, because U.S. dollar yen, I think, that was a pretty decisive week last week, and unless yields shoot up, there could be some more downside. I just think it looks pretty weak technically right now. U.S. dollar yen. That's how we pair. Well, you know it. You trade U.S. dollar yen. So you think U.S. dollar yen? This was a buying opportunity. This break we had in the yen last week. U.S. dollar yen.
I actually would probably be, again, the dollar and while the dollar and crude are negatively correlated to each other, I'm not looking as how can I put this? I don't think those trades are obvious relative to other currencies. So I think there's a whole other dynamic going on here between dollar yen that doesn't affect crude. And again, because half of our crude comes from Canada, it doesn't come from those other countries. And we're now one of the largest oil producers in the world. That dynamic doesn't necessarily work. I mean, if you look at resistance and put this dollar yen chart up here, this is a great opportunity to short the dollar against the yen for more yen strength, because this 114 level has been a massive source of resistance for this pair for a long time.
Right. Okay. Yeah, that's great, Alan. Did you bring any other things that are on your radar to talk about?
That's probably the biggest one. I would just touch on that as a position trader, as it relates to the pound, right? I mean, I can't touch this with a 10-foot pole.
Okay.
I just put this on right here. I mean, this is what the euro pound. If you're a day trader, I think this must be a paradise. You guys are probably making a lot of money with the swings back and forth, but it's so politically charged that I think it's very difficult to make a trade because there's just no trend.
And if you're in the U.S., the moves happen in Europe anyway. So, that big candle happened overseas by the time we got here.
The other currency that I'm watching very closely is the Swiss franc.
Yeah.
Because and I have a short position here, which I just opened. I see dollar franc going quite a bit south. I think the sell-offs, what's interesting about equities right now is there's been a lot of selling, especially on international, but there's not a lot of panic yet. I think, and I could pull up the S&P, I think if we break through the next support resistance level, if that happens, and if is the largest two-letter word in the dictionary, but if that happens, you might see some panic creep in. When I looked at the VIX on Friday last week, I think it's at 18. That's not panic, right? We'd have to see the VIX pop up to 25, 30, 40 before we could get serious about markets panicking. If you see that, I think you're going to see money run into the Swiss franc like crazy, and you'll see gold shoot up and all that good stuff. But right now, there's just not a lot of panic. But I think the dollar will be weakest against the reserve currencies like the yen and the Swiss franc.
Don't you view a weak dollar, since people complain that a strong dollar is deflationary, that a weak dollar is actually supportive for equities, especially the multinationals. We're all complaining about the dollar translation in the last round of earning reports, so a weaker dollar could actually buoy equities.
It's funny. I don't know if you can have it both ways. And what I mean by that is oftentimes what drives up U.S. equities are foreigners investing in U.S. markets. So if we have a weaker dollar, that means that they're probably not investing in U.S. markets. They're probably sitting on their dollars. On the other hand, greater demand for the dollar, a rising dollar, can just as easily also rise markets. So I don't know if that correlation necessarily works.
Yeah, I've been trying to figure it out for about 20 years. So 30 maybe, Alan. So if you'd like, this would be a good time to show your website and how people could reach you and what your business model is.
Sure. So very simply, right now, I'm just trying to build community. So you can get my weekly newsletter, which is called Traders Call. Let's bring that in here. And I post videos 5 days a week on YouTube. They're about 10 minutes or so. But on Traders Call, you'll get my themes for the week, and I talk about these themes over the course of the week. And if you click on YouTube, you can watch the videos. And I, solicit and ask for all kinds of feedback. If you sign up for the newsletter, I only have one ask of you, which is that you take the information I give you, you make the trades, you can make them in a demo account, and just share that with me. So that way, I know I'm not just throwing these signals over the transom and they're falling into your email box and never opened and never used or anything. So in a spirit of building community, please show me you're using the trades. Or if you don't want the trades, tell me your trades are terrible and I don't use them and here's why.
Yeah. Okay. That's a reasonable request.
Yeah. And then the open trades that I have, if you just look at CAD-yen, I put a link here so you can click this and it'll show you the trade. Beautiful. And then I do have another link where you can track all of my closed trades. And there's history there, and there's some performance numbers and some other performance info.
Yeah, I want to wrap it with one question I was going to ask you at the beginning. I believe, I used to take on, relate to some type of animal spirit. You need the courage of a lion, soar like an eagle. Why sea lion? Why sea lion?
Oh, well, thanks for asking. So if you visit my website, www.sealionllc.com, it's the same as my Twitter handle and everything else. So I went to I have a young daughter, and I went to some sea lion shows with her. I live in the New York area, so down at the Brooklyn Aquarium. And I was so fascinated with these animals, I did some more reading and learned about them. And the way they eat, they hang out on the beach, they wait for the tide to get to a certain level, they jump into the water, they grab their fish, and they run out. And their number one predator is a shark. So the sharks, they like to hang out there and hope that they can catch them while they're grabbing their fish. And to me, that sounded just like trading, because all I do is I hang out on the beach, wait for that opportunity, run in, and try to get out before the sharks show up.
Beautiful animal metaphor. I love it. I knew there was something to it. You know what? I hope that you never run into the great white, Alan, and that you have a great holiday season in health and pips rain down on you and yours for the rest of the year. And really a pleasure meeting you, and gave us some great looks today. And like it or not, I will now call you my trading warrior brother.
Oh, thank you so much, Dale. And yeah, to you and your family as well. Happy holidays, happy Thanksgiving, Happy Christmas, and Happy New Year. And just thank you for the opportunity to share my charts with your audience.
Yeah, it was great, Alan. Thank you so much for your time today. Everyone, that's Alan Posner. You know how to follow him at his website, www.sealionllc.com, and on Twitter at SeaLionLLC, Alan Posner. Thank you, buddy. Have a great Thanksgiving. Face, I'll see everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. And if you go into the water to eat after you've been laying on the beach and you haven't been hit by a shark, that's why you count your blessings. So I'll talk to you later on. Good hunting the rest of the day. You're very welcome, Bob, Todd, everyone. And that's a wrap. Adios. Good hunting. Thanks again, Alan.